The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, how you doing today? So go ahead and do a quick market wrap for you, let you know where everything's sitting at right now across the board. We got the S&P up 4 points. We got the Russell up 5. We got NASDAQ up 13 and the Dow up 37. And let's see here. We got on the metal side, we got copper up almost a full percent. It's 0.0315 right there. We got gold is up 10 points right now. And we got silver up 0.063. Pretty small, almost flat on silver now. Looking over at the energy, we got natural gas up 40.042, so 1.5%. Man, it just keeps on a swinging. And looking over at crude, we got crude down 0.5%, down 50 cents right now. And looking over at the ags, we got corn up 3.25, so pretty small move in corn right there. But nevertheless, a move. And we got soybeans are just up $1, so they barely moved at all for the day. Looking over at the currencies, we got the euro dollar is up 38 pips off yesterday's close. The Aussie dollar up 28, and the pound dollar up 39, with the U.S. franc basically flat, and the U.S. Canadian sitting down 5, ticks basically flat on the day. So looking at gold right here, some interesting news coming out. There's literally like 2 different reports coming out. One is that Spain is going to be asking for a bailout this week, and another one saying that Spain does not need a bailout because they're doing all the right things. So I know they are scared to death of that scenario because Spain will not agree to the austerity measures, and which means they can't provide a bailout, which means that everybody sees the EMS for what it is, which is nothing, especially when they're trying to get it signed next Wednesday. So keep that one in mind. Next Wednesday is supposed to be the big European Stability Mechanism, ESM, vote day. So we'll see what happens on that side. Now, looking over on, we had the gold trade. I don't know if y'all caught it earlier on the Bull Bear Binary Hour. If you didn't, go back and watch today's archive of the Bull Bear Binary Hour. And you had me and Steve and Tom, basically, like I called the deviation level. Steve went in, he called the reversal. Tom said, hey, here's where it's going to go to. I then called the spreads and the binaries. We put them in. We put our take profits in. 10 minutes later, bam. Hopped in, took our profit out, made a nice chunk of change really fast. And it's just a really good example, a good way for you to see how spreads and how binaries both work as we were able to get in them and take advantage of that big drop in gold. And we did, of course, take our profits because now it has retraced back. So so that's why you do take your profits at your expected moves on the way back down. And whether you're trading spreads or binaries. I personally like the spreads a lot better because it's like trading the underlying market. Binaries are more of a statistical thing, and if you don't set take profit orders, you're just asking to give away your money. So you always got to set take profit orders when you trade on binaries. So anyways, just keep that in mind, check it out, but it's a great way to trade gold. It's a scary thing to trade gold whenever that thing drops, 10, 15 points in a matter of a few minutes. And so you don't have to have that fear if you're trading on Nadex, because let's say if you were long on gold, then it wouldn't have nailed you because, you would have probably lost on the trade, depending upon where you got in at. But let's say you got in near the high. But if you're using the spreads, then you can go in there and you can put a trade on with a very low risk, a high profitability. And if it goes against you, your risk is capped, but you're not out of the trade. And you have the chance, you have the time to be right. You actually still have another 20 minutes to be right if you bought really high. So we'll see how it ends up. Today is Triple Witching Friday. So September Triple Witching Friday. 7 out of the last 10 in a row have won. Okay, have been profitable, whatever you want to say. And 8 out of the last 10 total. Okay, so out of the last 7, they've been profitable. 8 out of the last 10 have been profitable. So the chances of the market closing higher are, at least seasonally, it's in their favor. And so that's your seasonal cycle for the day, for today. And next week, seasonally the week after Triple Witching Friday in September, is a bearish week. The only thing that could really, I see forecasting affecting that would be Spain asking for a bailout and, of course, not getting it. Or, now, of course, I guess that would add to the bearish week. And then with the one that could upset it could be the ESM contract being signed and put into place, because that means it'd be in place in October and ready to go. So if that gets signed on Wednesday, which, all signs point to it being signed, then, that'll be, of course, bullish for the euro, bearish for the dollar, which will, of course, force people to put their money into equities and drive the market. So just keep that one in mind. Wednesday is going to be a big key day, Wednesday overnight session there. And we'll go ahead and, since we're talking about economic reports, let's go ahead and talk about that part of diagnostic trading. Let's take a preview of this coming week and see, what we got on the roster. So looking at this coming week, on Sunday, we're going to have the monetary policy meeting minutes. They're going to be coming out from Japan. And so, that'll, of course, continue to have an impact. The yen's been going, they launched QE8, literally, QE8. So it had a big move right there, but it actually got stronger despite another round of quantitative easing. So the yen did get stronger in the U.S. yen. When it goes down, the yen's getting stronger, the dollar's getting weaker in that process. And one of the trades, of course, to keep checking out, too, is, we'll go ahead and pull this up here. This is a fun one, is the euro franc. Basically, Switzerland has locked the rate at 1.2. Okay? So what does that mean? That means if it gets down to 1.2, they're going to do whatever it takes financially to keep it there. That's why you see this flat. This is daily bars we're looking at right here. Okay? And so if it gets down there, then I would call that a pretty strong support line. So I don't know if I've ever seen such a strong support line. So that could be an awesome buy for you possibly. If you're using Nadex, you'd have to go in and do like a U.S. franc and a euro dollar. And so if you're doing that, you'd have to buy the euro dollar, and then you'd also buy the U.S. franc, and that'd actually be equal to a euro franc. Why is that? Well, if you buy the euro dollar, you're bullish the euro, you're short the dollar, okay? If you buy the U.S. franc, you're long the dollar. So now the short dollar on the euro dollar and the long dollar on the U.S. franc have canceled each other out. And then you're short the franc by buying the U.S. franc, okay? And so that's a way that you could put those two together, whether it be spreads, binaries, whatever, if you wanted to basically make a synthetic cross-currency like euro franc. But just an idea for you, check that out. And even if you're just doing spot, there's a lot of cool ways to trade it. But so that's going to be our Sunday. On Monday, we don't really have anything big coming out. We got another FOMC member speaking. I mean, they're just doing a whole tour of the country right now, trying to gain some popularity. If you want to see something really funny, check out the archive. I think it's 2 days ago. We went over the Facebook thing from the San Francisco Fed and the responses that thing got. They actually put out a poll saying, write in your own answers and vote for the answers you like on what you think about the effect that the QE will have on the economy. And they did not get a lot of positive responses, to say the least. So, anyways, but check that out. It's hilarious to look at. Look up San Francisco Fed Facebook, and you'll find it pretty quick. Or just check out the archives, and you'll be able to see that on there as well, on the Diagnostic Trading Hour. And then looking over here, let's see, what do we got? On Tuesday, we got consumer confidence. Before that, we got Draghi is going to be coming out and having another speech. Man likes to talk a lot. He's going to be talking at 9 a.m. Let's see, what is that going to be? That's going to be Eastern time, so 8 a.m. Central. So really, right before the cash market opens, Draghi's going to come out and have something wise to say, supposedly. So, just be aware of that one on Tuesday. And then we got the CB Consumer Confidence Report, and they surveyed 5,000 households, and they asked them about basically their thoughts on economic conditions, jobs, how business is doing, just their overall opinion on the economy. And then, Geithner's going to, that man, he does not need to be talking to anybody, but he'll be talking at 1:30 Eastern, 2:30 Central, or 1:30 Eastern, 12:30 Central, on Tuesday. So that, of course, is also, anytime he hops on, then he's going to be, moving the market, because anything he says will. So I call it the Geithner indicator. So basically it means, sell. But we'll see what he has to say. And let's see, what do we got for Wednesday? Right here on Wednesday, we got a German 10-year bond auction. Shouldn't be too big of a deal. We got new home sales in the U.S. That's going to be big on Wednesday. So that's going to be 9 a.m. Central, 10 o'clock Eastern. New home sales will be coming out. New home sales are huge for copper. Okay, existing home sales will move copper. New home sales will definitely move copper. So copper could be your trade. Copper is a scary thing to trade if you're trading the futures. So definitely check out the spreads or binaries over on Nadex if you're looking at trading copper. Of course, we'll have our crude oil inventories like we have every Wednesday. And another great way to trade those right there on Nadex. And then let's see here, hopping on over and looking at Thursday. On Thursday, we're going to have an Italian bond auction. So that'll be curious to see how that one turns out. They've been sort of ticking up, ticking down, ticking up, ticking down, trying to stay away from that 6% mark. And they're expecting them to give a yield of 5.82. So we'll see what happens if they break that 6% level, because they have not been in the news as much lately as Spain has. And then we'll have the core durable good orders here in the United States. And basically it's a big leading indicator of production because it's purchase orders of, durable, the core things that people need to make things. So it's a big thing for manufacturing. And then we got unemployment claims. Of course, that's it's sort of weird. I mean, unemployment claims goes in these cycles. It'll have like a massive impact, then it'll have like no impact. Now, your non-farm payrolls, that's going to have a big impact. Things like that. Your unemployment rate, that's going to have a big impact. But unemployment claims, it literally is just back and forth, back and forth. So we will, keep your eye on that one, though. That's going to be 7:30 Central, 8:30 Eastern next Thursday. And we're going to have our final GDP coming out. We'll also have pending home sales coming out. So you got several different ways you can trade that day. But you got unemployment claims. So, of course, that's going to be, the dollar, or that's going to, like euro dollar or whatever. Or that's going to be any of the major indices. The GDP, of course, would be the indices and the dollar. And then pending home sales, copper. And then at 10:30 Eastern, 9:30 Central, you're going to have natural gas storage. So, of course, that's going to be natural gas. Pretty obvious. And that's every Thursday that trade sets up for you. And then looking over at Friday. On Friday, we're not going to have a whole lot here in the U.S. That's big. We have a lot of little numbers coming out next Friday. And they come out in the morning. We got like University of Michigan consumer sentiment. But I mean, that's usually like a couple-point move either way, unless it's just dramatically off. We will have Canada's GDP coming out on Friday. So if you like to trade the U.S. Canadian, then that could be a good time for you to trade on Friday, 8:30 Eastern, 7:30 Central. And we'll go ahead and hold it right there, and we'll be right back after this commercial break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I want to go ahead and remind you, if you haven't done so already, do it right now. Go to TFNN.com, click on the Nadex banner. On that Nadex banner there, click on Log in, okay? And you can log into your account and get access. Well, what if you don't have an account? Click on Create a Demo Account right there, and you can access it. Also, if you just click Create Account, there's a link to the live account and the demo account. So demo account takes about 15 seconds to set up, and you can trade along with us as we do trade sometimes on the show. We do them on the Bull Bear Binary Hour. You usually like to throw out at least one trade. So let you sort of trade along and just learn how it works and do it safely. Now, as far as opening an account, you can open an account in as little as 5 minutes, and it's only $100 to fund a live account. So you can have a little bit of skin in the game without, as you're learning. Makes it a little more interesting. Also makes you pay a little bit more better attention. One of the great things about Nadex, of course, is all the products have limited defined risk, and meaning that you cannot get stopped out. It can go against you. Basically, your risk won't increase and goes back in your direction. You're still in the trade. You could still be profitable on the trade. So definitely it is worth checking out. And if you have any questions, just give me a call. Right here, we also have the phone number right here on the homepage of TFNN.com, 877-927-6648. Again, that's 877-927-6648. And we have a workshop coming up in just 1 week. And we only have 20, 30 spots left. So you want to grab that. It's a free workshop because Nadex is paying for it, which is pretty cool. So click on free live workshop. Now it's going to be in-person live, okay? So you need to be in the Tampa area on Saturday, September 29th. And it's going to be from 8:30 to 12. And we're going to be holding it over at the, make sure, Grand Hyatt there in Tampa. And we're going to give away a lot of prizes, books, silver bars, all sorts of things like that. And all the details there on TFNN.com. Just click on free workshop and put in your name, first name, last name, address, register, save your spot. And understand we do have limited room, so only register if you are definitely going to be there. But if you can, you should be. If you saw just this morning the tag teaming that went on the gold trade, that's what we're going to be doing for several hours. And we're going to go in and we're going to teach you literally how, to identify trades, how to set them up. I'm going to go into diagnostic trading. I'm going to make sure you have bull spreads, the box spreads over in Nadex down backwards and forwards. Then I'm going to talk a little bit about diagnostic trading and deviation levels. And then we're going to go into setting up the trade. And then me and Tom are going to go, okay, here's how you use risk and money management. So like, where do you take your profits and how do you limit your risk? And what's the proper way to do that? So we're going to put all that together and wrap it on up. But 3.5 hours, Saturday morning. And most workshops like this cost you a lot of money. So this is a great opportunity, and we appreciate Nadex for sponsoring and hosting it. If you're going to be in the area, you do not want to miss this event. So it's going to be we think it's going to be packed. It's going to be really good. And if you haven't already, Steve has an awesome thing, and you saw like this morning how he helped us, pick out a good trade. Steve Rhodes has a great online workshop coming up here next month, and so hop on TFNN.com, check that out. Also, he has a free report over here on candlesticks, and you can get access to that free report. It's on the homepage of TFNN.com, and it's the second link down there you'll see under breaking news. You'll see that link for Candlestick Speed of Trust by Steve Rhodes. So definitely register for that and confirm your email. You'll get the report right away. And, every little bit that you can add to your learning, the better. So the more the better. And you can, of course, watch us on TFNN.com, or you can listen to us anywhere as well on your mobile phone at TFNN.mobi. So those are the events coming up that you want to be aware of that you can take advantage of right now. So hop on there and grab the free live workshop, grab the free report, check out his event that's coming up here next month. And I'm sure it'll be exciting. He'll be recording it, so even if you can't be there in person, you're going to be able to get access to the recordings. And even if you are there in person, you'll get access to the recordings. Go back and watch them over and over again. So check that out and just keep growing as a trader. It's a constant evolving process, and one of those pieces I talk about is in diagnostic trading. I sort of back it up, and diagnostics I put under the umbrella of style, and so that's where you're learning how to read the markets. So whether it be the technical, indicators and chart patterns, whether it be the fundamentals, what to expect, whether it be the seasonal tendencies, like hey, it's triple witching Friday, so we're probably closing higher than we did yesterday. I had a bullish signal to go long last night. Right after the market closed, just based on the seasonal cycle. And then the market started trending up. I'm like, yeah. So, and then also the deviation levels. How far should you expect the market to move today? And when you step that back, you then have a system and you have a strategy. And you got to get all three pieces together. We'll talk a little bit about that when we come right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. If you're a trader thirsty for knowledge, then we have the perfect event for you. Tom O'Brien will be hosting a live 4-hour dynamic trading strategies workshop on September 29th in the Tampa area. This one-of-a-kind workshop takes place from 8 a.m. till noon and is completely free. We'll even be giving away almost $2,000 in door prizes randomly drawn from those that attend live. Along with diagnostic trading expert Darrell Martin, Tom O'Brien will teach you how to identify and set up your trades using dynamic trading strategies, and Darrell Martin will teach you his diagnostic trading formula, including the strategy, system, and style that gives you an edge in this market. For more information and to reserve your spot today for the September 29th free Dynamic Trading Strategies Workshop in Tampa, please visit the front page of TFNN.com. Don't wait to act, as space is limited. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. And we just did a wrap on our fundamentals. We were wrapping up there. I was talking about the difference between strategy and system and style. Okay? And we're talking about this a lot more in the workshop, the free live workshop that's going to be coming up here. Make sure you register for that if you're going to be in the Tampa area next Saturday. And whenever you're trading, you need to have 3 things. And a lot of traders only have maybe 1, or a lot of times eventually 2. Okay? So the first one you got to have is strategy. And strategy is, how do I use the platform? Okay? How do I use the charts? How do I edit the indicators? How do I get live data? Okay? How does a future work? How does futures work on the E-mini indexes versus gold versus this versus that? Okay? So whatever you're looking to trade, it's understanding that actual strategy instrument that you can use to try to make money with it. And you know, that applies for Forex, it applies for stock, it applies for options, it applies for Nadex, binaries, and spreads. So that's all strategy. That's your mechanics. You have to have that down before you can do anything. Okay? You need to know your charts, and you need to know the basics of the instrument that you're going to trade. This makes sense. And that's where you get, a lot of people want to start with how to make money. Well, first, you know, get wheels on your car, and then we'll work on putting an engine in it. Okay? So you got to have the basics, got to have that framework down. Okay? Now, the system, okay, is the next step. Once you got down those basics, as a brand new trader, you got to get that stuff down. You know, or even as an experienced trader on new products like Nadex, Once you have down the strategy, you understand how the product works. Now it's, okay, how am I going to use the product to make money? So am I going to do a gap fill trade? Am I going to do straddles? Am I going to use, butterfly patterns? Am I going to use an ABCD type formation? Like what kind of system am I going to use to determine my entries, my exits, and my stop losses? Okay, and that's your static system. The reason systems fail is because systems by themselves can't account for everything. A system is sort of like having how do I make sure I have a healthy heart? Well, I eat right, and I go to the doctor, and I exercise, and, all that. But if you have that system down, but you don't look both ways before you cross the street after getting a healthy checkup, then a bus can hit you and you die, despite having a healthy heart, okay? So you need to have a system, but you can't, the system by itself won't be enough. That's why all these little robots and everything else out there are never going to work in the long run. They don't account for the buses in the middle of the road, like Fed funds announcements and, some ECB person getting on TV or the president getting on TV and saying something, or war or QE or, whatever, unemployment. They don't account for the news. So they also don't account for deviation levels. So they just keep going. As long as that little rule's there, it just keeps going and keeps going. And usually they, some do, some don't, but most of them don't account for seasonal cycles unless it's the system is just to follow a blind seasonal. Okay? So systems by themselves are great because, now that's why they're bad. Okay? They don't do all those things for you. Why are they good? They keep you in check as a trader. So if I think the market's going to go up, then this has to happen, and then this has to happen, and when it does, this will be the risk I use. This is where I will place my stop, and here will be my initial profit target, and here's how I will move up my stops. It's your rules, okay? And you have to have rules, otherwise you're just winging it, and it may work for a little while, but eventually you'll crash and burn. And if you've been trading for any amount of time, you felt the high of not having a system by just feeling it, and you felt the low of feeling it come back against you. So you got to have a solid system in place, one that you can trust, one that you rely upon. But, let's say you have whatever your system is, there's style involved. So style, when am I going to implement the system? Okay, am I going to implement it like after market open or before the market opens or during the Asian hours or, during the European overnight session? What am I going to use? Am I going to use Renko bars or Heikin-Ashi bars or range bars or minute bars or, hour bars or, what bars am I going to use? And then, after that you go into, okay, well, now that I got all that down, what news is coming out? Where are my deviation levels? So I know where to take my profits. Like that's how, like whenever we were looking at gold earlier today, one of the things I noticed, like, okay, gold's at one deviation. Let's go short gold. And Steve was looking at the same setup. He had a different way of looking at it. He had a technical way of looking at it. I had a deviation way of looking at it. So either way was great because they're both style. It's how we look at the market. And just in case we were both wrong, because we're like, hey, it's going to move from here, one way or the other. It's about to move. And we put on a couple binaries on the other side just as a hedge in case it did take off, but not giving up too much profit in that process, but allowing us to recover in case it did decide to go another 10 points to the upside. We thought it would go down. We were heavier on the downside with spreads and binaries. It did drop. We had to take profit orders in. We got filled minutes later. So, but that was style, okay? So the strategy was either binaries or spreads, okay? The system was going in and going, okay, I'm going to use a spread to limit my risk. I'm going to go short at a deviation level, and then I'm going to always put in a take profit order on how far I think it's going to move. And, the style will just look at not only the deviation levels to determine that number, but also just the time of day that it was. We were able to look at the volume. The market was making highs on lower and lower and lower volume. And, on intraday, that's a big deal. And basically means it's ripe to do something pretty soon because it really wouldn't, it didn't have any conviction in its continued up move. It was starting to pull back already and look pretty weak. And so that was looking at it and going, okay, you know what? I'm going to go ahead and implement that system where I go short the binary when I think I'm at a, expansion level, a high. And I'm going to use that. I'm going to either short the binary or I'm going to short the spread. And we're going to do both like we did. And then I'm going to take profit off at this level just based on where everything is sitting at, based on the most recent resistance level. And I'm going to put my order in the second I get filled, so that way if it does move fast and it pops back up, then I still have the chance to make my money. So that was our system, and our style helped us do that. So again, strategy is just the basics. Okay, basics of platforms, basics of the instrument. System is your rules for entry, exit, take profit. Style is how you look at the market to decide when. Style helps you decide when to turn your system on and when to turn your system off. That's the simplest way I can put it. Okay, and if you get those three things down, then you're becoming a well-rounded trader, because most traders either just trade from their gut and they don't last that long, or they just trade by system and they wonder why it works half the time and not the other half if they're lucky. So you don't want to be that trader. You don't want to be that system trader that gets killed every time the market decides to change, which it always changes once you get a system that works. You need to have something more than that and put all those pieces together for you. So anyways, that's just a quick lesson for you on strategy and system and style. And of course, I'll go into more examples of that at the conference we're going to be having a week from Saturday. So just 8 days from now, register on TFNN.com to get access to that. If you have any questions between now and then, give me a call, 877-927 and 1067. And again, you can get that number right there on our website at TFNN.com. And, not 1067. 877, thinking of a different number. 877-927-6648. Again, it's 877-927-6648. And I know these spreads and binaries are definitely new to a lot of people. But if you're trading futures, if you're trading Forex, if you're trading ETFs, you should definitely be checking out the spreads. So binaries, that's a different animal. It's really simple to understand, and it's very hard to trade profitably. You really got to know your deviations and all that. Spreads, if you can trade any instrument, you can trade the spreads. Okay, there's like very little difference, and we talk about that on here. And if you have questions about those differences, just let me know. Okay, and I'd be happy to help you out. So with all that in mind, there, let's check out and see what else we got going on. And we'll go over our deviation levels, and we'll just do a walkthrough on the markets right now. So we did a little fundamental, and we did a little technical, and we did some seasonal. So now we're going to do some statistics. So, but not the hard kind of statistics, the easy kind, where I sort of lay it out and say, hey, it's Friday afternoon. What do we think is out there, if anything, that's currently sitting at a certain level? Okay. So we'll go ahead and just start from the top on the indices. So on the S&P, again, now it's up 4 points. So it's, you can tell it's working on keeping that Triple Witch and Friday seasonality alive. And now you don't trade just on seasonality. You're going to combine that with things like a technical analysis. Okay? So is the market trending in that direction? Well, yeah, it was trending that all the way up into the close, and it kept doing it. You're also going to combine it with things like deviation that want to take profit. So in this instance, we had a deviation level of 1462, and it literally hit 1462, actually 1462.02, but yeah, 1462. And we got to basically 1462.25, so one tick above the deviation level. And that's where you would want to be tightening stops. If you tightened your stop, you got stopped out, you took profit, you're glad you did, because the market just fell right back from that point. Okay? So those deviation levels are very helpful. Also, when you get to those deviation levels, it helps you know, hey, don't add on more trades. All right? Take profits, look at reversals, things like that. And we'll go ahead and we'll switch on over. We'll check out the Russell, the small caps over here. And it had a high of about 857 or so. And so looking at the deviation levels, we had a move. That's a perfect one deviation move. So literally, let's see here. We've got 857.1 and 857.2 was one full deviation. So when you hit a deviation for a reversal, when you hit a full deviation, so like gold hit a full deviation, look for reversal. Russell hit a full deviation. You could have been looking for a reversal. So on the Russell right there, now it's already pulled back. So going over, we'll check out some other possibilities. Got NQ, went up to 2871, and 2871 was our 0.7 deviation level. So that's where we're taking profits. Not necessarily reversing, but definitely taking profits at that point. And if we see a reversal, we'll take it. But, that let us know, hey, tighten up our stops if you were long at that point. And then going over and checking out the Dow. On the Dow, up at 13,588, which is just crazy. going over and looking at that, 13,588.6 is actually what I have, which, I mean, you're not trading the 0.6s, so it's just the numbers that come out that way. But literally perfect deviation, again, at 0.7. They're sort of all hitting 0.7s on the indices. And except for the Russell actually hit a full deviation move. So that was your strongest signal right there to reverse and get out. And then looking over, copper. Copper had to move up to about 3.81, and on copper, 3.799 was a 0.7 deviation. So that's take your profits, tighten your stops. Definitely tighten your stops if you haven't taken your profits. And gold, of course, we know that one moved today. And on gold, it moved on up to 1790, and a new recent high there. And 1788 was one deviation. So as soon as it passed that, you need to be taking some profits and tightening stops on any remaining positions, and probably looking for it to reverse. And it did right off of that. And then going into silver. Silver had a big move, basically moved the same way, and it was up to 35.26, and we had a full deviation was at 35.38, so it passed the 0.7, so the tightening stop point, not necessarily the reversal point. Gold gave us the best reversal signal on that. And then if we check out our energies over on natural gas, it moved on up to about 2.9, and we can see over here natural gas, that had been a move. 2.9 is almost a deviation level. So again, tightening stops, knocked out, and you're happy because you got a good chunk of the day. And now checking out the oil contracts. On the oil contract, let's see here. Now this is a CL. The reason I focus on that, that's just what Nadex is based on. But 93.84. And let's see here, 93.73 was 0.7. So it also had that tighten your stop, get ready for a potential reversal. Don't necessarily reverse on it, but get ready for one. It did, and you could have had some nice early morning profits on oil. And, you could use a 0.5 or 0.7 on Fridays, but, just depends upon, what you feel most comfortable with. 0.5, really, it wasn't even showing a sign of weakness, but at 0.7 it definitely was. And then going on over and looking at corn, and let's see here, corn's loading on up. There we go. And on corn, we got up to about 754.5, something like that. Yep, 754.5. So on corn, our deviation level was actually 754.06. So we literally hit right at that. Now, in this case, 754.06, that was a 0.7. So you got a lot of 0.7. So you sort of start to see a trend where everything's hitting 0.7s, or everything's hitting 0.5s, or everything's hit, you'll usually only have a few hit ones. But your big thing you're trying to figure out, is it a 0.5 deviation day, or is it a 0.7 deviation day? And either way, tighten your stops at both levels, and that'll usually, or has seemed, at least to me, to work out very, very well. And then we can look at a few of the currencies as well. So we'll just pull up a few of them real quick. And we got euro dollar right here, taking its time to load. And I have no idea why euro dollar would take any time to load. But here we go, Aussie dollar. And I'll come back to euro dollar while it's figuring it out. And let's see here, it went up to 1.0518. And Aussie dollar, 1.0518 would have just been at the deviation level, so that is like the perfect time to reverse. So do a reversal play. All right, stay right there, folks. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And just going in, and we were doing some wrap-ups on the deviation levels for you here. So what we got Aussie dollar wrapped up. Let's go ahead and check out the euro dollar. See, yeah, there you go. Finally, she's loading. And got the euro dollar. Looks like at a high of right around 1.3047. And on that note, 3047 is just 7 ticks above one deviation. Look at that. Falls back down, moves on back up right towards it, and then falls on back down. So we had a deviation level of 1.3040. So you already had 2 chances for entry, one in the overnight, another one right in the early morning to short the euro dollar right off the deviations. And let's go ahead and let's check out the pound dollar and see how Britain's doing with that. 1.6308. And move it on up to 1.6308. That's a little bit past the deviation level. So deviation level actually would have been 1.6283. So like right about here. And you can see it did actually pause a little bit at that level, but then it came back down off of it and still would have been a good short whether you're doing binaries or spreads. Now don't do these on like outright futures. So or forex, you can get killed on them because it may decide to be a 2 deviation day. But definitely a good way to play the spreads and the binaries and just, sort of some easy calls, you could say. Over on U.S. franc. On U.S. franc, what do we got? We're going to go ahead and check that out. U.S. franc has a move down to 0.09284. And that's almost, actually that's a 0.7. And then it moved on up to 0.9343. So checking that out, 0.9343. And not even half a deviation. So it was actually obviously heading more or leaning towards the downside with that deviation. And going over and looking at the U.S. Canadian, and what we can see on that, it did pull down quite a bit earlier today and then pulled on back up 0.9731. And so if we check that out, what is 0.9731? That literally to the pip is the 0.7 deviation. So we had a lot of 0.7s, a couple 0.1s. And again, 0.7, you're tightening. Like 1.0 deviation levels, you're reversing, okay? Taking profits. Now, if you're reversing, you're not just reversing, with just, prayer and a hope. You're reversing, with the ability to have tightened risk management by using the spreads. And then going over and checking out USD yen. And on USD yen, let's see here. Not a whole lot of movement, but it is pushing lower and lower. And on the high side, had a little rally early, 78.36. Basically would have barely put you at a half deviation. Right now, it's making new lows over here, 78.10. And that would put us 78.10 almost to a half deviation level. So it's really obviously been very choppy and flat. Not the prettiest chart for trading right there, unless you're a scalp trader. But that wraps that up, and then I guess we've got two more things. We'll wrap up corn and soybeans before the show is over for the day, and then I'll see y'all next week. And let's see here. We got a high of 754.58 on corn, and we got a 754.06. So it sort of popped past it right there, and that's not much of a move for corn, by the way. So it literally just a couple ticks past it and came on back down. So perfect deviation level. And then looking over at soybeans. What do we got on the soybean side? On the high side, we got a high of 16.39, and on soybeans, move up to 16.37. Would have been 0.7. Didn't quite reach a 1, but you could have been tightening your stops. You'd have been glad you did when it pulled on back, and it's fallen all the way down to 16.09, which would have been not even quite yet a half a deviation. So, anyways, but learn your deviation levels, learn how those work. Call in if you got questions about them. And y'all have a great day, a great weekend. I will catch you next Monday, and hopefully not this Saturday, but next Saturday in Tampa at our event at TFNN.com. Go ahead and register right now so you can meet us live in Tampa.
Time